Okay, guys, welcome to today's show, Brett's Property Rants. So, actually, today's really good. I was really happy researching today because actually, it's almost like half of me thinks I'm waiting for the big bang to, everything to drop and things like that. But actually, that hasn't been happening. There's more good news coming out, and that's a good thing. I think the longer we can keep that good news coming, the more it is. And I think part of it is definitely the government's approach to things. And sure, let's put the lockdown aside right now. But in terms of their willingness to stimulate and things like that is great news for property investors. So guys, welcome to the show. And look, today what we're going to be covering is pretty much unemployment jumps. So it has gone up, okay? But it's not as drastic as we may have thought. Redundancies are up, but are they? Our fascination with house prices. Once again, I'll show you exactly what I mean here. Property funds, and I think this is really important because the alternative to buy to let and to investing in individual properties is you give your money to somebody else and they invest it into a fund and buy property, okay, or shares and things like that. But the property funds specifically are really struggling right now, okay? And up the hill, so I took Bastien and Ahmani out and you'll meet them today. BREXIT, heading for a no deal, but, yeah. And then I wanted to introduce cladding and, external wall systems. And does it affect you? Because it may actually affect you and you not even realize it. And when you come to actually sell, it could affect you. And then overseas investors here to save the day. Is it a good thing? Is it a bad thing? And then finally, my rant, which is future tech and the future of construction. So guys, what I really would love you to do is comment and effectively interact with the channel. I'm more than happy to answer questions during here. I'll make time for that. And, look, I'm across all the channels now. So I've got a full-time social media manager on, a full-time videographer. So we're actually really starting to get organized now with the channel and with the live stream. You would have seen it evolve over the last sort of 6 weeks that I've been doing it. And there's more and more people watching it, which is great. So, I'm really sort of focusing and putting a big, fair bit of chunk of time into this. And I think hopefully getting value out of that. But, I'd recommend any questions you've got, make sure you subscribe so you get reminded of these, but also comment. And, I'm happy to answer any questions you've got because it is a time where, there's ups and downs and there's all over the place. So, yeah, it's good to have, I guess a voice that represents the property investor because that's really what I'm about. It's not about being politics. It's not about being any particular interest group. I'm for you guys as property investors. Okay, so let's get into it without further ado. Recession rant, yeah. So actually, things aren't as bad as they could have been. And every month that goes by and we don't do this is, another month we get closer to coming out the other side, which potentially is in the spring next year. So I think, a lot of people that were predicting that it'll be a really slow winter and things are going to drop off and unemployment and all those sort of things. Well, you know what? Yes, unemployment is increasing, but not that much. If we have a look at these are the figures out just the other day. And, so you're looking at 4.5%. So they were 4.1, if you remember, 4.1, they've gone to 4.5. So not massive jump. They're still expected to go up more. Make no mistake about that. They are still expecting to go up more. Inflation, the rest of the figures are all sort of standard. They haven't changed, but the 4.5 is the unemployment rate. How bad is it so far? Now, if we have a look at this is the chart effectively dating back to the 70s, okay? So you can see that actually the unemployment rate hasn't yet jumped at all, okay? Now, normally we would go into and lose lots of people, and then it takes about 2 years to uptake those jobs, okay? We've also got, like right now, the unemployment is not too much of an issue. The other side of it is, Boris unveils the 3-tier restrictions, which could have problems. And if you have a look now, and actually I know Lincoln, where our head office is, has just gone into the high level, which is a bit of a worry. Not the very high level, just the high level. So we'll see what the effect that is. The other side of it is redundancies, okay? 8.2 for every 1,000. So you see that's right at the edge there on the graph. It's jumped up. So that has jumped up, but we were expecting that, okay? So don't be too worried about that right now. We were expecting the redundancy to jump because obviously with the furlough system coming to an end, employers now are having to fund much more of their employees' wage, and that will have an effect and is having an effect without a doubt. Okay, so I think it's really important. I don't want to go too much into this, into the recession and the negative stuff that comes out because there's so much negativity out there. But actually, what I am impressed with is the other side, which is the positive side. So you've got a really good balanced economy right now. You've got those that are saying, no, it's going to drop, and those that said it should have dropped, and those that predicted 3 months ago that it would drop, and it hasn't yet. Okay, and just like with Brexit, where everybody said it was going to go down, and actually I was saying, no, it'll be fine, and it was fine, and we went all the way through without too much of an effect. Certainly this effect, it may have been a slow, drawn out, and not increase, but actually just more like this. But I think that's where I'm tending towards. My prediction, if you remember from, I think 2 weeks ago, minus 3%, I think, in 2021. So see how that ends up compared to everyone else. So I wanted to show you this. I thought this is interesting because obviously house prices, we did a big session on house prices last week. I don't want to do this sheet, but I do want to show you this, okay? I just want to show how price focused we are, guys. Now, if I type in UK property news, yeah, and what do I end up with? And I'm actually going to go to the news section, okay, not the all. Just get a bit of photos in that there. But if you have a look here, residential property, window of opportunity, growth in demand. You're talking about lockdown restrictions on house prices. You're talking about the house, so that's actually a property fund one, so exclude that one. House prices, REIT, so this is a property fund, they're all struggling. House prices. Oh, that's actually a Daily Express, so they're giving away a property for a buck. But then we go to the next page, so page 2, house prices. Property market bounces, but reducing prices. Prices. So the only news in property seems to be about prices, okay? Sorry guys, did you get that? Oh, yeah. So I think if you actually look at it, and when you look at it, things are still looking pretty good. The North is still doing really well and looking quite good. Now, next week what I'm going to cover is property funds and the issues they're facing, because I think that's really important now that we have a look at that. And yeah, I think, actually there's a lot to be said about the alternative to property. I mean, everyone's saying jumping out of property, buy to let's dead, all this sort of stuff. But look at the alternative. I mean, I've said property is the new pension, and that was 10, 15 years ago or whenever it was. But the reality is that now more than ever, it still is there. Now, yes, it might be getting attacked, but the reality is so is the alternatives. And the returns that they're looking at getting you are significantly lower as well. So don't think that this is just a targeted buy to let thing. This is across the whole industry. And the question is about how do you make large returns now? And a lot of things are falling over. I've got the special in 2 weeks' time is alternative investments, and just showing how bad some of those are performing, whether it be student or hotel rooms or HMOs, or there's a whole range of things that just aren't performing the way they perhaps were sold to perform. Because let's face it, times are changing. All right. So I want to show you this video. So this is I'll introduce you to Bastien and Ahmani, who are my 2 eldest kids. So here we go. Hey guys, so for today's outside broadcast, what I thought I'd do is I would just you walk to the top of Bukit Timah Hill, and I've got the Bastien and Ahmani here, and I guess what I want to do, and I thought what was really interesting is just the whole process of coming here and going up to the summit. Now it's 163 meters tall, so it's not the most massive hill or most massive mountain in the world, but it is Singapore's tallest one. So how was it? What were you thinking before you actually started this?
I thought it was really high because I didn't really understand how high it actually was.
Yeah. So it was 163, but you didn't really, you couldn't relate that. You maybe could relate it horizontal, but not vertical. What about you, Bastien?
I thought it was, when at the start, I was kind of positive, and then when you told me that it was going to be like an hour and 30 minutes, I started to think it's going to be quite hard. But then when we got here and now we're up here, it was quite easy actually.
Yeah, and it only took us about 20 minutes in the end, didn't it?
Yeah.
But when you first, the first part of it is quite steep. It's like about this steep. How did you feel when you saw that?
That was like, that's gonna be super tiring. Yeah, that I thought was the main challenge. And also there was another part, that stairs, and that was also that looks very challenging.
Yeah, and I think, look, how this relates to property, because let's face it, let's do that. And thank you guys, and well done, congratulations. But how this relates to property is this, is that right now you're probably looking there and you're going, this seems too difficult. this seems too hard. I haven't done this before. I'm in the unknown. I'm uncertain. And I think the key to anything is, to get educated, to get good quality people around you. And when you do that, you realize that actually a lot of things aren't as hard as they seem. And in actual fact, what you plan to be, an hour to get up actually turns out to be 20 minutes, or it's a lot simpler, especially if you get good people around you, and especially if you you overcome the initial hurdle of, and look, the start is always like this, for anything that starts like that. But it was like that, and then it was pretty much like this the whole way up, wasn't it? The rest of the way.
Like it was like that, and then like sometimes like that.
Yeah,
and
then
then
it had little
like,
bits, because you're always going to have those. And I think this relates to life and anything. Same with property investment. It really is very easy and simple. When you start looking at this and realizing, once you get a plan, once you get a strategy that meets the market, you get good people around you, your power team, then actually property's bloody easy in any market. Even if you're looking down the barrel of recession, even if you're looking, because there's opportunity everywhere. You've just got to know how to find it. All right, guys, back to the studio now. See ya. Say bye.
Bye.
All right, guys, so that's Ahmani and Bastien. We went for a lovely walk up the hill. It was a great morning. But I think, I don't know if the Indian guy there knew that he was actually getting filmed, but anyway, no, so I think the real important thing here is right now, you're probably looking there going, everything seems to be uphill. Everything seems to be, I'm just going to sit there. Now, I think the most important thing about this is this. You can look at this hill that you're facing up, the challenges and how hard it's going to be, and focus on how hard. And you can sit there and procrastinate and not take action. Yeah. Or you can go, you know what? I'm just going to put one step in front of the other, not rush, not run up the hill. Yeah. But just take one step at a time. And I think that's the key to a recession and surviving a recession or a downturn or whatever you want to call it. Yeah. Because when you do look at this and when you do get into this, you realize that actually with each step of the way, you can get people to help you and educate you, and you can read about it and experience it and question and do all these sort of things. And actually that's how you get the best amount of certainty, and obviously having a team. So guys, if you've got any questions, write them in the comment box. But how are you finding the hump right now? Is it overcoming you? Is it almost too much and I can't make a decision? Or are you finding actually, no, it seems to be a clear path through, So just write in the comments and see how, it'll be interesting to see what your feedback is. So let's move on to BREXIT. So BREXIT's starting to hot up. I think we've now, it's almost like the virus is sort of sorted, and I'm not saying it's sorted by any stretch, but we've dealt with that. And now Brexit is really coming to the fore, and Brexit is coming to the fore because obviously we had this notional date that we had to be done by and have a thing. And I've been saying for a while, we'll get a deal, but it won't be a real deal. It'll be a deal for politicians to say, look what we did, not actually a really working, effective deal, I don't think. And I think that's one of the keys here with this whole thing. And when you have a look at it, EU pushes to, budge to, budget critical stage. Look, this is going to happen. This is part of negotiation. This is what you expect in a negotiation. All right. 48 hours to deadline until, and this is a 48-hour deadline that we put in. We put the deadline in at the end of the year, and then we said, well, we want to have a deal by this time. Yeah, otherwise we won't be able to get it through. And the reason they put that in was because they won't be able to get it through Parliament, etc. So is that going to, is it all going to turn to crap, and is it going to have a no deal? Look, we may. Yeah, it's certainly, if you think about how much of a schmozzle it was to actually exit, yeah, it's the same thing that's happening now. Neither side wants to give way, but in the end, both sides will realize it's politically more expedient and better for them to actually get a deal, even if it's a shallow deal that doesn't really mean a lot, than to not get a deal at all. So I think that's, we will see a deal come out of that. Yeah. So I want to move on to cladding, and I've put the cladding rant here, but I think this is one of the key, and it may be the biggest thing that you never knew about. So basically what we talk about cladding. If you look at a building, the outside of the building is oftentimes, it's got fixtures. Now, if you think about Grenfell Tower, okay, that actually was the cladding that burnt up, okay? And what they've realized is the building standards that they've had for the last 30, 40 years are not really appropriate. Now, the issue is they want to replace this, okay? But I think the interesting thing is 150-year wait to replace all claddings. so flats can be sold. Now, what do they mean by that? Well, I'll come to it in a sec, okay? But keep that in mind, 150 years, yeah? Not all sellers are equal. Why cladding changes are urgently needed to free up the UK property market. Right now, if you have I think it's over 18 metres that has if you want to sell a property, you need to go and get a report, an EWS1 report. And this is the dilemma, yeah? 3,000 blocks are potentially dangerous. Now, the government said that it's 2,957 or whatever, but it's semantics. It's a lot of buildings that need to be checked and make sure they're compliant, and the ones that aren't, they need to replace the cladding, yeah? It's a massive, massive problem. Now, interestingly, the same things happen in Australia. That article is actually from Australia. They're facing the same problems where, the cladding that was back then that's being implemented is not, it's flammable, and whether it was flammable back then or the way fires worked, but it is now, who knows, yeah? The fact is that it's dangerous because it's not built, building's not built to have the fire go up the outside, yeah? Everything is about keeping the fire on the inside there. So having a flammable thing on the outside just pulls all the oxygen out, and obviously you get a Grenfell Tower, which nobody wants to have a repeat on. And I think that's the real problem. And the real problem is the cost. Now, I've seen 4 billion, I've seen 15 billion, I've seen 19 billion, I've seen all sorts of figures, yeah? Now, who's gonna pay for that? I mean, the problem is realistically, it is the leaseholders or the freeholders, whoever owns the building. So if you own an apartment in a building that's, that is there, and this is the issue. If you want to sell a property now, you need to get that EWS1 report and give it to the lender or to the solicitor, who will then confirm with the lender they have it. The lender won't lend otherwise. So if you want to get a mortgage, you're not going to get it unless you have that EW1. The other side of it is, the other side solicitor is not going to let you exchange or complete on a property until that EWS1 report is in place. So that is stalling so many sales right now. And we've got a number of clients who are affected by this. And this is the problem, yeah? Trying to get someone to go out and do the report is the delay right now. It's not even about, you could have perfect cladding, yeah? But because you can't get, because there's such a backlog, and this is the problem. The same thing's happening with the ICRs. The same things happen with all these sort of things, services, where the government just says, right, we're changing. And then doesn't think about, well, hold on a sec. You've got to get this many properties through that new system, and it's just creating backlogs, yeah? And that's the drama. And then what they do is they make it so, punitive, like if someone needs to sell their property and they cannot sell it because they cannot get someone to go in, and it could be a 100 or 15-year wait or 150-year wait. It's ridiculous. And that is the problem with cladding right now. So if you're not aware of it and you want to know more about that, then, by all means contact the team. But the reality is probably contact your solicitor if you're looking to sell, because you may need about 3 to 6 months before you can get somebody in to get the report, to get it back, to actually be able to sell your property. All right. It is a real big problem. Okay. And right now, the government's put £1 billion at it, but £1 billion is a drop in the ocean, it seems, and it's not really getting anywhere with it. So that's the real issue right now. Okay, so I'm just going to get, so Himansu's come out with a question. So do you think house prices will drop after stamp duty is increased again? Good one. Awesome question, actually. And you know what, get a lot of people asking this question right now is, do we have to rush? The problem we've got right now is we've had a rush, and the rush has continued. Everyone was thinking it would taper off, and it has tapered off a bit, but not as much as, it's not dropping like this. But what it means is the pipelines now are full. So if you want to get mortgages, you're going to struggle to get mortgages. They're going to take longer. If you want solicitors, if you want all these processes, you need to go in and get those. And that's one of the issues right now. Now, will that mean that stamp duty, prices increase, drop after stamp duty drops? Look, I don't think stamp duty is that much of an incentive. Now, yes, it's an incentive for people who wanted to sell. It's an incentive for people that wanted to buy. So it's been a great thing from that perspective, but it's only, it's for a limited period. And yes, I do think prices will drop? No, I think what it's done is it's got us through the winter months. And I think that is above all the key thing here. It will keep some buoyancy in the market over the winter months so that when we hit that spring bounce that we call it in March, April every year, that's the time at which then the stamp duty will drop away and the market should pick up. So I think it's actually perfectly timed. I don't think we're going to see a drop because of the stamp duty, okay? But I'm also not one of these people that believes it's the stamp duty that's causing a massive influx of that. And I think that's, one of the other keys too is, it's very easy to say, yes, this is the reason and, stamp duty is the sole reason. No, there's so much pent up demand from, austerity layered with BREXIT, and all this sort of stuff that finally people have been given the ability to move. I mean, I just had a thing there about the, northern properties leading the way. Well, they should, because for the last decade, they have done very little. So it's great that they're actually now starting to move, and they've needed to for some time. We've got another one here. So how long will, how long will long-term property cycle of prices increasing over time be affected by the current economic climate? Good one. Again, this comes down to government policy, okay? We've got the fiscal and monetary policy. Monetary policy, which is changing, lowering of interest rates and things like that, money supply, that is largely gone now, unless they go into the negative interest rate terms, which they may well do. The other side is the fiscal policy. The fiscal policy is taxation and incentives and stimuluses and all those sort of things, okay? Certainly because they have, they're pushing to have, stimulus and keep stimulus, and they're talking about changing plannings and all these sort of things. Actually, that should allow us to get through this. This is why I think that we're not going to have this big drop. I think we're actually going to play through quite well, all right? That's my take on it, but I think that's where I'm at. Do I think that, how long is it going to do? Look, normally if you have a drop and unemployment rate increases, it takes about 2 years to pick up that slack in the economy, okay? Now, if it's really, really bad, we may sit at the bottom for a while, but you're still things will drop and then they'll hit the bottom, and then once they hit the bottom, they'll bounce along and they'll start to come back out. So for me, I would say at the most, and obviously plucking things out of the air here a little bit, is that 2 years, So we're talking, 21, 22. By 23, I think we're going to be back into it. I actually think London will come back strong sooner. And one of the things we'll talk about in a second, is the international investors. Because I think, and in fact, I'll get onto it in a second. Well, I've got a few questions coming through now. Good. So we've got one from Recession. So look, I think 2 years is probably the most will be affected. I think we've got this coronavirus, et cetera, for the next 2 years. So bank on that, but I don't see prices dropping massively. But I expect unemployment to increase, but not that dramatically because the government will be stimulating. So Ritesh's got two questions here. The North seem to be going back into lockdown. Should I stay away from property up there? No, not because of COVID. Okay, now I will explain my thinking, and this is, you've probably heard this many times if you've been watching the channel. Major cities are where the investment is going to. Yeah, I don't care about people saying we're moving out into the suburbs. No, that's not good enough because people need jobs, and where are the jobs? They're in the cities. So if they're moving out, it'll be the transport links. It'll be the commuter belts for that major city. So for me, up north, great, if that's what you can afford in the cities and around the cities and the commuter towns, yeah? Otherwise, if it's just in the middle of nowhere and it's cheap, don't buy cheap, buy fundamentals, yeah? And that is the key for me, don't buy cheap, buy fundamentals, all right? So that's probably answers that one. So Bank of England talking about negative interest rates is good or bad for property. So look, I don't think that there's a couple of sides of this. It's actually a good question. So the first side is this. I don't think we will receive negative interest rates. So don't think for a second that the banks are going to pass that on to you. Yeah, and in fact, that a lot of mortgages now, if you read them, they're collared. In other words, they can only go to a certain rate. All right. So negative interest rates benefits the banks, but in some ways it benefits us because the banks have more leeway, they're making more margin, they can take a bit more risk and they can lend out, which keeps the market afloat. Now, make no mistake, right now the market we live in, okay, is such that it is stimulated by the government. It is stimulated by, low interest rates. It's stimulated by, a currency, inflating the currency, away. And unfortunately, that's just the market we live in. Now, if you have a look at, in the 70s, we didn't really understand this. You had some pretty shocking times. I remember my parents went through that. I was too young to really understand it. The 80s, again. And each time, the recession has got less and less of an impact. Okay. Now, if you lose your job, if you're that, it's a horrible impact. I agree. I'm not discounting the individual, but as a country, it's less. Back then, when a country went into recession, that country could go into recession, but not the rest of the countries. So negative interest rates, coming back onto that, I think they're neither good nor bad. I think they're relatively indifferent. Okay. If they give the stimulus and they help the banks, and the banks then continue lending, which I think they will have to, because the political power will be, hey, guys, get out there and lend. Do the right thing, And I think from that, that's a good thing. So for me, all of these layers that we're talking about, what they mean is they're going to be supportive measures to stop that. Now, if you're waiting around and you're thinking, I'm going to wait for these 30% drops and all that sort of stuff, I've got bad news for you. I look at Australia and one of the things Australia does, Australians love property and they invest in property, and they're so heavily invested in property that actually if their market crashed, their whole economy could be devastated for years. Okay, so the government has zero interest in allowing that to happen. And I think that is what's happening in a number of places around the world. Now you have the bigger issue here is this. You got a choice. A lot of pressure is being put on you to get out of buy-to-let. A lot of people are saying, it's too expensive, can't make money, it's no good, buy-to-let's dead, blah, 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 all that, okay? The reality is the alternative is not much of an alternative, You've got to make a choice now, and hopefully you've already made it. Hopefully if you listen to this channel, you've already made it. But property, you've got to make a choice whether you're a landowner, okay? In other words, a landlord, or someone who lives on the land. Now, if you think about years and years ago, you had peasants, you had the landlords, and you had the royalty. The royalty these days are called billionaires and multinational companies. And they will continue to get richer and richer and richer and control more and more, and especially now with AI and data. Okay, and we'll talk about the seminar series we're going to go into. We'll talk about the autumn seminar series in a second, but that's one of the topics I get into here, which is about the billionaire class. Then you've got the landlords. You want to be part of that. Now, obviously, if you can be part of the billionaire, fantastic. But you want to be a landlord. You don't want to be, if you're looking back years, a pleb, a peasant, the people that don't own property. That, I want to be squarely there. And that's not a derogatory term from my perspective. That is just, you have the choice of not owning land and being controlled by landlords and billionaires. Because make no mistake, the billionaires are in control. Politicians now, they just don't have the power they used to, okay? And they're unlikely to get it back because now AI and all this sort of stuff is taking over. Automation, But we'll talk more about that in a sec. So hopefully that's there's some pretty cool concepts there. And I do get into more detail on them. So, if you want to, I'll go through the webinar in a sec, and you can look at the autumn webinar series. You can go to gladfish.com/webinars, and find out more. Let's talk about overseas investors. Because we, as a business, we have about 40% of our clients are actually overseas investors. They come from primarily Singapore, Hong Kong, Malaysia, Middle East, and they're the sort of two hotbeds, if you like. But we also have Vietnam, Thailand, and a few things like that. But really, Asians and Middle East, if you like, are the two sort of areas that we're big in. We market there, we do that sort of stuff. Now, the question is, and really is, are they actually going to help us? Now, interestingly, Asian investors spend 700 million on London real estate H1 2020. London's still the biggest draw, but where else? Rich Chinese investors buying. So it's like, where else are they? Well, actually, now it's interesting because when you look, the GCC, the Gulf Coast, basically all these investors are being drawn to London because it is a world city. And to be fair, it's a fantastic place. And you know what? We used to say New York, we used to say, America, the foreign investment there, but you know what? That's dropped under Trump. Trump really has said, make America great, screw the rest of the world, and you know what? They've responded and said, screw you, Trump. Will that change? Who knows, But the interesting thing is, the foreign investment is drying up everywhere, okay? It's not just in the US, but to be fair, it's made it harder for London, there's no doubt, or London and UK, yeah? And understand, when I talk about foreign investment, I'm not just talking about London nowadays. I'm talking about London, Manchester, Birmingham, even Liverpool, you know, even Leeds, excuse me. You know, some of these places, you know, they really are starting to now, you know, get some really good things happening, okay? Because, you know, certainly Birmingham, Manchester and London are world cities now, without a doubt. You know, look, I think one of the key things here for me is that, you know, overseas investors saved our bacon in the last recession, because what happened when the recession hit, nobody could get financing. It was really difficult. And so international investors come in and they supported those house prices. Yeah. So yes, you can say, well, actually, you know what? I don't like that. I don't want them to do that. I want house prices to drop so I can get on cheaper. Okay. There's a total argument for that, and I get it. And you know what? I'd love to, you know, have that discussion in the actual comments. So, you know, foreign investors, is it good or bad? What do you think? You know, because realistically, London is it's a world city now, by all, you know, in terms of everyone moving there, you know, from all different nationalities. Manchester, Birmingham, they're all that way now, you know. So you can say, well, actually, this market is just for locals, but what is a local in London? You know, these days, I mean, you know, I'm Aussie, you know, and I know, in fact, in our London office, I think there's a few times where we haven't employed any English whatsoever. Any native English? I don't know how you explain it, but yeah, you know, but that is, you know, that's not changing either. The world is becoming a much bigger place. And I know when I go back to Australia now, Chinese, Indian, you know, they've really started to come on. I mean, let's face it, they're a third of the world's population and more. You know, now they've started to jump on planes and go out and live in other countries. And we're starting to see that cultural diversity and coming around, you know. Is it good for property? Look, I think from a house price supportive perspective, yes, it is great, because if the locals can't lend and the local companies are making it hard, lenders are making it hard, then the internationals will get in there and help out, you know. So that's quite good from that perspective. The whole political about, you know, rising prices and, you know, increasing demand, that's another story altogether, yeah. Okay, so let's talk about the autumn webinar series. So what we've got is a series of 7 webinars. This is the first of them. Where will you make money from property post-COVID? So there's 3 words in this series that we're addressing: recession, disruption, and predictions. And what I want to really get across to you here, and I think the real interesting thing is we're going to look at the recession and how to combat that and how to see your way through it and the strategy and all that sort of stuff. We're then going to look at disruption, which is much bigger. That is actually where things are going, irrespective of recessions and that sort of thing, you know, and it's something that we really need to look at. And then predictions, and we're going to look at why we are making the predictions we are. And it's 7 series, so this is the first in the series. We start off every Tuesday, 5 p.m. London time, you know, from the 20th of October all the way through to, I think it's the 1st of December. Okay, and yeah, so Ritesh is going to be joining, and Dan's going to be joining, and also Ryan will be joining as well on various ones. So we're really looking forward to that. If you want to join up, just go to gladfish.com and you've got the webinars there. We'll be releasing the other webinars as well, but if you sign up for one, then you actually signed up for the whole lot of them, so you can come to any of them, which is really good. So if you're interested in that, by all means. So guys, any questions you've got on that, you know, look, I think one of the great things about those webinars that I love is that it allows me to start introducing some of these juicy topics that I'm doing, like AI and its effect on property investment and how it's going to disrupt the property market. Interestingly, the property market hasn't been disrupted for, you know, the 25 years I've been in it. I'm pretty much doing the same thing that I was doing 25 years ago that I'm doing now in the same way. Yeah, okay, the internet has changed it slightly. Yes, CRMs has changed it slightly. You know, I used to have a card deck. I used to have business cards, you know, but now, you know, it's still the same process, which I'm amazed by, because there's so many efficiencies that can be done, but because the data is not quite there. And, you know, look, it may take one of those big 7, the big Tencents and Googles and Amazons and those guys to come in and actually disrupt the industry. Or it may be a company you've never heard of that actually nails it and all of a sudden becomes the next Google, because the housing market, the property market is a massive industry. It's a massive industry. Employs massive amount of people through agencies and through all the building and construction and all that sort of stuff. Yeah. Cool. So let's talk about the rant for today. And rant, this is one of those juicy topics that I love too. And you'll hear more about this because it is starting to really now affect us. Okay. And that's basically property tech. That there is the Google headquarters in King's Cross, or that's what it's going to look like. You've got a 25-meter pool, you've got the nice little gardens on top, it's 7 floors high, absolutely fantastic. But the amazing thing is, it is state of the art, in terms of technology. Yeah, in terms of the building materials they're using, every aspect of it. Okay. Now, interestingly, let's have a look at future tech, because this is the future tech which maybe, is already, or you've already heard of and you're already here. Things like 3D printed houses, autonomous vehicles, 3D printing, wearable technology, robotics, artificial intelligence for construction, maybe, eco-friendly materials, augmented reality, analytics and Internet of Things. They're probably stuff that you've maybe heard of, and I guess if you've heard of those things, great, but you've probably heard of them, but you don't really understand how they're being applied to construction. And so I think this is one of the things is every time we sold new homes. I've sold new homes for near on 20 years now. In fact, it's probably longer than 20 years. And in that time, the quality of the build, and a lot of people say, oh, the quality is terrible now. If they don't build them like they used to. And okay, yes, at the end of the day, things have changed, and yes, they've got smaller, but smaller doesn't necessarily mean that they're worse. Actually, they're much more energy efficient. A lot of the heating systems, a lot of the, insulation, all this sort of stuff are so much more efficient. And the next range of things is going to change. And I'll just show you this video, which is quite interesting. Right? So the interesting thing there, they can build those 10 per day. Yeah, so 10 of those modules, they can bring them in and they literally drive up on a truck, they get craned on top, boom, locked in place, and then they fit them out. It's that easy and that simple. And interestingly, I was chatting with Barclay Homes. They're one of our developer partners that we work really closely with. And what they were saying is that, and this is probably 5 years ago when I first started talking about this, they were saying it's too expensive right now, but they're looking into it. Yeah, so they're using the normal, the guy goes in there and hammers a nail, the guy goes in there with a trowel, and basically that's what they were doing. Now, about what it was, probably 2 years ago, I was sitting there and I was saying, hey, what about this or that? And they're saying, well, actually now they're both around the same. So the cost of the prefab stuff has come down, all right? And obviously the cost of labor is going up. So because those now are around the same, they can start to utilize that a lot more. And as the technology increases, it will continue, all right? Interestingly, here's some of the things you may not have heard of, okay? And, so you've got artificial intelligence in construction, eco-skeleton for construction workers, aerogel insulation, self-healing concrete, pollution-fighting buildings, bamboo cities, smart bricks, robotic swarm construction. Sounds very ominous, doesn't it? Skynet is coming upon us. Vertical cities, transparent aluminium if you're an Australian, carbon nanotubes. And a lot of these things are actually coming out. And interesting, one of the other ones that I saw, Nicola says is quantum computing, and 100%. Computers are so much faster now than what they were, and that's awesome. And yeah, thanks for that contribution, definitely. But look, guys, the future actually is pretty cool. I mean, when you look at what's happening, I look in Singapore, where I am now, and I see these buildings going up where they've got, on the outside, they've got gardens, hanging gardens, where they've got roof gardens, where they've got stuff growing on the top, where they've got, there's I've forgotten what it's called. It's basically vegetables that are growing indoors in that purple light. And it's a 5-story building. It's amazing the technology that is already here and it's already being used, but right now it's not quite in mainstream because the costs are a bit higher, okay? But that, as the costs come down, then you'll start to see this coming out. And so there is some hope for us, and there is some hope for the future, certainly in terms of construction, okay? And, look, yes, we're doing terrible things to the planet, but, we are slowly changing. And I think, with people, like Trump and that getting out and the fossil fuels, moving away from fossil fuels, that'll make a huge difference. But things like construction does as well, because the amount of heat you need to produce to, especially in the UK. In Singapore, it's all about air conditioning. It's the opposite. But, in the UK, it's all about heating. So you've got to have good insulation. And you can do that now. You can have it so that, you've got glass panels that they keep the heat in, all right? So they keep the heat in and keep the cold out, and that's done through just the chemical that's inside. So rather than just putting two pieces of, glass together, you put a gas in the middle of it and it refracts, various things, UV or whatever, depending on what it is. And you can change that depending on what it is. There's these smart buildings now where they're all AI and they're all run from that. It's an amazing thing when you look at it. And so actually the future is bright. So as much as we've got the recession and all these concepts, actually a lot of this stuff that we've been talking about, which almost is science fiction, is now starting to become, oh, sorry guys, I just realised this is, for some reason I've got two mics on. So there may be an echo there, apologies. There may well have been a, sorry, I've lost my train of thought now. Yeah, there may well have been, the efficiency side of things, but look, I think that side of it is really coming and it's good news, So it's not all bad. And I think actually a lot of the stuff that's coming out now and a lot of the evidence is supporting house prices not doing this, but actually just ticking along, yeah? And sure, people are going to lose their jobs. The unemployment rate is going to increase, They've extended the furlough. So a lot of these predictions around what unemployment rate's going to go to may now drop down a little bit, It certainly hasn't hit as hard as some people were making out, So from that perspective, things are looking pretty good. Guys, any questions you've got, you can send them through to webinars@gladfish.com. If you're listening to this and it's not live, then, by all means, otherwise jump on the channel, please subscribe, comment, because, I do answer the comments. I'm spending a couple of hours every day now going around the social media and answering things and, having discussions and getting that happening. Look, I really want to get the message out there that actually you can make money now, you can invest now, and actually you need to get moving, because let's face it, the alternative is not performing any better than what the buy-to-let is, and you have a lot more control. And you know what? When the dust settles and everything, gets back to normal with COVID and these sort of things, what you're going to realize is there is still money to be made in property. I've seen this happen many times where people jump out because of a specific change, or you can't make money anymore, and then they regret it, because what happens is then property doubles again. Okay, so don't be that person that jumps out. All right, be that person that sits there, and when they see the hump in the hill and they face that, rather than going, oh, it's all too hard, and stopping or turning around, one foot in front of the other, and just build on the strength, one foot in front of the other, and get up the top of the hill, because I can tell you the view from the mountain is fantastic. So guys, have a fantastic day. Any comments you've got, send them through. Otherwise, if you want to, go to /webinars, gladfish.com/webinars, and get on and join that autumn webinar series. 7 webinars, all on topical topics, the important things that you will really enjoy, because actually they're stuff that I'm excited about. So that will definitely come across, and you'll see how passionate I am about some of these concepts, like AI in property, like data in property, big data in property, and its impact on things. Because it is starting to have, it's starting to have an impact. We're seeing property software, property tech massively blowing. They're everywhere, and a lot of them won't survive, but the ones that do survive will own that specific market, that specific niche they're in. Okay, guys, thank you for joining us this week, and we'll see you again next week, same time. And hopefully you'll join us for the autumn seminar series, webinar series as well. All right, guys, have a great day, live with passion, And we'll speak soon. See ya. Bye.